Well, hello, this is Jeremy North with your educational and economic update for December of 2021. In this month's video, I will discuss major headlines that influenced markets in November, as well as economic and market events that we expect to influence December returns. Please stay tuned at the end of the video for the always exciting required disclosure statement. Well, after a bad September and a great October, the market gains continued into November, with stocks setting new records. However, by the end of the month, the rally retreated quickly as the Omicron variant news hit during the last full trading week of November. The month closed out with the S&P 500 down 0.83%, the Dow fell 3.7%, the Nasdaq actually was slightly positive at 0.3%, and the Barclays Aggregate Bond Index was also slightly higher last month with a positive 0.3%. The markets had largely ignored the continued inflationary reports and ongoing supply chain issues until the new Omicron variant news hit on November 26th. The uncertainty of its severity continues to spook the markets. However, it has been tempered by some news suggesting it may be a tamer version than some of the previous variants, at least as far as severe infections are concerned. So far for the month of December, higher valuation tech stocks are taking a hit, while energy, industrials, and airlines are making a comeback. December has been historically a strong market month. As Sam Stovall had pointed out, since 1928, the S&P 500 is up 73% of the time in December. However, until a more complete picture of how severe the Omicron variant will be, we will likely see the market continue to bounce around. The Fed indicated last week that it will end its bond repurchase program faster than anticipated. Federal Reserve Chairman Powell was quoted saying, "At this point, the economy is very strong and inflationary pressures are high. It is therefore appropriate, in my view, to consider wrapping up the taper of our asset purchases, which we actually announced at our November meeting, perhaps a few months sooner." He also changed his stance on the transitory nature of inflation, adding that it's probably a good time to retire that word, and adding that inflation is likely to move down significantly over the next year as supply and demand imbalances abate. However, he told the Senate Banking Committee on November 30th that the Omicron variant poses downside risks to employment and economic activity, and that the threat of persistently higher inflation has grown. While Powell's statements seem contradictory, we should get a better feel for the Fed's next steps on December 14th and 5th as they have their final meeting of the year. So bottom line, with all the uncertainty mentioned, we expect volatility to continue over the coming months. Well, if you have any questions on how the recent economic reports could impact your long-term goals, I am here to talk. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 636-896-4052 or send us an email to info@360ira.com. With all that being said, here's the required disclosure that I am going to read for you here. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves a risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thanks again, Jeremy North, signing out for the month of December. I hope you have a wonderful Christmas holiday, New Year's, and I look forward to seeing you all in 2022. Take care. Bye.